Hello, Stewart Heath here, CEO and founder of Harvard Grace Capital, coming into the end of our series 100 Questions You Should Be Asking Your Passive Activity Sponsor. We're in the final section. These are questions about insurance on the project that you're considering to invest in. And so let's go. What kind of insurance will you buy? Are you buying replacement cost? Are you going to get something cheaper? You know, frankly, in the last 4 or 5 years, one of the biggest expenses that we've had as a property coverage, operating expense is insurance. It's just gone crazy. It's gone sky high. And sometimes for no good reason, just because they had losses somewhere else on the planet. But insurance matters, especially when you need it. You're going to want them to have replacement cost coverage. And not something cheaper that's just going to reimburse what the cost was, 4 or 5 years ago. Is the insured value equal to the purchase price plus planned upgrades? If you're insuring it at the price that you paid for it, but you're fixing to dump twice that value into it, is your insurance going to keep up? Because an insurance is a contract. Insurance company is going to live by that contract, and you're only going to get the amount of insurance that you paid for. If you bought a $5 million building and then you upgrade it to $8 million, but your policy limit stays at $5 million, tornado comes through, knocks it all down, guess what you're going to get? $5 million. You're not going to get the full value unless you've got replacement costs, but even with replacement costs, they're going to up that value every few years. Does this policy, and usually this is a separate policy, sometimes it's built into your property coverage. Do you have business income replacement insurance? Like say, sometimes it's a separate policy, sometimes it's an addendum onto the policy coverage, but like for one of our storage operations, if the tornado comes through and knocks down everything, we have purchased insurance to replace that income because guess what? The mortgage payment goes on. So to replace that income as well as providing us the coverage to rebuild it after the disaster. Very important, especially when you're talking about business operations. All businesses should be looking at that. It can be very expensive, but sometimes it's a good business decision. You want to find out what the deductibles are for wind, hail, or named storms. The insurance companies have gotten away from just having one overall deductible, especially on commercial properties, and they love to highlight out named storms. And of course, the National Weather Service just loves to name everything these days. So that becomes very tricky to navigate that. Now, we carry a lot of reserves at our properties. So we try to get high deductibles, but I also do the calculations and make sure that we're paying for that because sometimes you're only going to get a few dollars of premium break going from a $10,000 to a $50,000 deductible, and it doesn't make any sense if you're only going to save a few bucks. So our deductibles tend to be lower, even though we could afford to have much higher, but they won't give us any break for that. You also want to know who that insurance carrier is, and if they are in one way or another using a self-insured mechanism, which can be great. You can get great savings, but if you're going to go self-insurance, there needs to be reserves out there, or they need to have some reinsurance that covers them beyond certain limits. So dig into who's providing that insurance. If you're going to be doing any construction, make sure they've got builder's risk. And do the principals, the sponsor, whoever they are they carrying errors and omissions or directors and officers' life insurance? This can be very expensive. Sometimes it can be impossible to get, but it will protect investors if that is in place. It's not always available, but it's something to ask. And that's really only in place if you think there's a chance of malfeasance or fraud or something like that. That's not going to cover you in disasters or anything like that. So one more episode, we'll come back and wrap up the insurance questions. Thanks for watching, everybody. Really appreciate you.